Wall Street bankers are preparing to price the SpaceX initial public offering at roughly $1.8 to $2 trillion. It is a market debut of a scale we have seen only once or twice in financial history. The justification for that price sits inside a 277-page prospectus, centered on a single, staggering claim: a total addressable market of $28 trillion. That figure is roughly double the revenue of every global corporation combined in the last year. When a prospectus reaches this level of bloat, the data often stops being information and becomes a distraction. The bankers are likely counting every dollar spent on global transportation and internet as a target for SpaceX, even if the overlap is minimal. The challenge for any investor is separating the company's actual value from the euphoric momentum that bankers are using to drive the price tag. To avoid the fallout of an overvalued debut, a smart investor must use the raw disclosure data to calculate an objective floor for the valuation. Navigating these cycles requires a way to measure the current market temperature against historical baselines. You can track those specific metrics in real time by downloading the Buffett Indicator iOS app. Long-term returns are almost always built by prioritizing cold mathematics over corporate storytelling. We begin by analyzing the Launch and Starlink internet divisions, which represent the company's established foundation. This chart shows how the unit economics, the profit made on every new subscriber or launch, are moving in the right direction. As the cost per launch continues to fall, Starlink's subscriber count has doubled, creating a significant and widening gap for potential profit. If SpaceX were purely an aerospace and internet connectivity provider, its path to high profitability would be clear and relatively easy to model. The prospectus reveals a pivot that changes the entire risk profile. xAI is moving beyond consumer subscriptions to compete directly in the enterprise AI market. Entering this space triggers a massive capital requirement shift to match the infrastructure spending of rivals like OpenAI and Anthropic. Financial statements confirm this cost. Research, development, and capital expenditures doubled last year, mostly to build AI compute capacity. This larger, competitive enterprise market crushes margins. It forces the company's projected operating margin down from 45% to 25%. This creates a valuation tug-of-war. We double our revenue targets for the AI division because the enterprise market is so large, but we have to subtract the massive costs of the infrastructure and those thinner margins. When you net those factors against the company's new cash reserves, the total operating value stabilizes at approximately $1.25 trillion. While the bankers are pricing a story of unlimited growth, the math suggests a valuation floor of $1.25 trillion, leaving a $500 billion gap of pure hype. Markets are split between two distinct groups: momentum traders who buy the current mood and investors who buy the underlying value. Traders will likely see the $1.8 trillion IPO as an entry point, betting that short-term excitement will push the price even higher, regardless of what the numbers say. But for the long-term investor, the prospectus reveals a governance risk that is hard to ignore. Elon Musk will hold 85% of the voting rights, giving him absolute control over how shareholder capital is deployed. Investors in this IPO are effectively funding a cash-burning, ego-driven cage match between Musk and Altman for AI supremacy. Paying the full IPO price means you aren't just buying into a rocket company, you are subsidizing a billionaire's personal arms race. The most effective move for a disciplined investor is often to let the initial market fever break. It is difficult to ignore a compelling corporate story, but waiting for a price that reflects the math rather than the mood is the hallmark of deep value investing. This analysis is based on our review of public disclosures and does not constitute investment advice. To go deeper into these metrics, join the deepvalues.ai community, subscribe to our sister channel, and like this video to help us reach more value-focused investors. In the end, price is what you pay, but reality is what you eventually get.